morning. Thank you for joining us. Welcome to Business Morning. I'm Chimeze Obi Iwagu. The Monetary Policy Committee meeting of the Central Bank of Nigeria has entered its second and final day. Now, the meeting is the second rate-setting meeting for the year. Analysts expect the committee to hold rates at the current levels. Investors are also waiting to see if the central bank will adopt a more flexible exchange rate regime after it devalued the retail rate by around 20% last month to ease a dollar shortage. At its January meeting, the MPC left all key rates unchanged. The CBN Governor Godwin Emefiele will be announcing the decisions of the committee by 2 p.m. today. And don't forget, Channels TV will be airing this live. We will also have a panel of discussants here in our Lagos studio with Channels Business News and Harriet Amay to dissect the decisions. In the meantime, the Africa CEO Forum taking place in Geneva, Switzerland, has entered its second and final day today. The two-day forum, which began on Monday, March 20, is focused on how to succeed in this new economic cycle on the continent, with a theme rethinking Africa's business model. The conference offers a unique platform for facilitating thought-provoking and forward-thinking discussions, as well as unique opportunities for business development, strategy refinement, and improving the overall competitiveness of African businesses. Channels TV business editor Bosun Omofa is attending this forum, and we will be bringing you updates on this. Now let's quickly take a look at what is making the rounds in the world of business. The federal and state government are said to be owing foreign creditors a total of $11.41 billion. Our statistics from the Debt Management Office shows that while the federal government's foreign debt stood at $7.84 billion as of December 31, 2016, the 36 states of the Federation and the Federal Capital Territory owed $3.57 billion. Of the country's foreign debt, about $7.9 billion came from multilateral agencies, including the World Bank and the African Development Bank. Meanwhile, the Minister of Finance, Mrs. Kemi Adeosun, says the federal government would, within 12 months, carry out a detailed review of the claims submitted by the states as over-deduction on the Paris Club debt. The minister explains that while the Debt Management Office had initially requested for a period of 22 months to complete the reconciliation and facilitate disbursement, the President, after considering the plight of salary earners, directed that the exercise be completed within 12 months. She described the directive by the President last week for the release of up to 50% of the claims of each state pending final reconciliation as anticipatory approval, adding that reconciliation was currently being undertaken by the DMO Office of the Accountant General of the Federation and the relevant state governments. The Asset Management Company of Nigeria has sold the nationalized Keystone Bank to a consortium of local investors called Sigma Gulf Nigeria Limited and Riverbank Investment Resources. Keynote Bank was the last of the lenders nationalized in Nigeria, which AMCON was seeking to sell. It was one of 3 banks nationalized following a $4 billion central bank bailout that saved several lenders from near bankruptcy in 2009. AMCON says the consortium had been picked out of 18 local and international bidders in a sale coordinated by Citibank and FBN Capital. AMCON did not, however, disclose the sales price or any financial details. And the World Bank Group has approved a total sum of $57 billion for Nigeria and other sub-Saharan African countries for the next 3 years. A statement issued by the bank in Abuja says the World Bank Group President Jim Yong Kim made the announcement before leaving for a trip to Rwanda and Tanzania to emphasize its support for the entire region. The announcement, which followed a meeting with G20 finance ministers and central bank governors, said The fund will be used to scale up investments and de-risk private sector participation for accelerated growth and development in sub-Saharan Africa. The bulk of the financing will come from the International Development Association, the World Bank Group's fund for the poorest countries. And to the markets now, we begin with the equities. The equities market opened the week positive, recording its fifth consecutive gain for the first time this year on Monday, with the all-share index climbing 0.07% to 25,671.55 points. Now, Monday's positive performance increased the month-to-month gain to 1.35% and trimmed the year-to-date loss to 4.48%. Total volume traded increased by 227.14% to 495.24 million shares, valued at 2.55 million naira and exchanged in 2,587 deals. At the money market, the overnight rate rose by 400 basis points to 19% from its previous close of 15% following the OMO auction. The Apex Bank sold about 2.32 billion naira and 63.77 billion naira of the 206-day and 360-day bills. Also, investors were upbeat in the bond space, with average yield falling by 10 basis points to 16.36% yield. The short-term, mid and long ends contracted.